Righty-ho, folks, here we are. Me and Philip Bloom is back in the house. He's age 20 now. This was his video. We're going to go through he's going to critique his strategy from when he was 15 and the video that did like 4.3 million views. We haven't done this before, and I don't think you've watched the video since, right? You're pretty fresh on it.
Yeah,
okay.
No.
So, unfortunately, you're going to get to hear yourself squeaking through it. We're going to hit play on this in a second. I'll skip through some of the squeaks because you probably don't want it. You probably don't want to see it too much, right? So let's just have a look at
that podcast interview. Now, this guy is.
First of all, what is up with my button? It's just horrendous. I don't think I had the proper head shaver at that point. I can't even believe I was walking around like that. I mean,
his Instagram profile says he's the world's youngest.
And just so you know, this was when I was actually recording these in the kitchen with some kind of blind out behind me. At least I've got an office now. It was just,
profitable Forex trader. We're going to see what he's got in store for us here. You can definitely tell from the answers he's been given that this isn't some sort of fallacy. This guy is quite phenomenal at the age of just 15. So, look, Philip, over to you. You're going to walk us through a price chart. Show us what you got.
Yeah, so here we have just an example as a USD CAD.
Okay. So he's going to dive in and we'll hear the start of it and then see what your
I'm just going to show the process of how I trade. So let's start from the daily chart.
Okay, to start off with, are you starting from the daily chart normally?
Yeah, daily or weekly, more or less.
Okay.
Yeah.
So still the same.
Yeah.
So on the daily, or we can even go to the weekly chart, I try to identify my area, my key levels, meaning areas of supply and demand, really, or support or resistance, depending on what it is.
So is that something you would do at this day and age?
Yeah, more or less. I think it actually looks quite nice.
Okay.
The lines and stuff. Yeah.
Now, futures traders, Blue Guardian can fund you up to $450K backed by weekly payouts, and because they sponsor Birmingham City FC, you know you're onto a winner. Go take a look at blueguardianfutures.com or click the link in the description.
So on the weekly time frame, I can identify that are valid, that are not too far away, is that we have this major area of supply right here, and it didn't. And as you can see in the past, when price touched this level right here.
So supply and demand zones, is that something you're still factoring in?
Yeah, sure, of course.
We had a huge sell-off. Now, recently we had a bull run on USD CAD touching this area of supply, and we had a huge, rejection as well. Now, let's take it down to the 4-hour, as the daily is nothing too clear on the daily. So what I would normally do is identify my trends and support and resistance areas. So as you can see here, we have a respected trend, respected once, twice, 3 times, 4 times. Yeah.
Now, is that a trend line you would have drawn today?
Yeah, it actually is, which is surprising. I mean, everything I said back then, I feel like it's valid. I don't really have any.
You're still doing this kind of down to the 4-hour as well.
No, that's not something I'd be doing. But for what it is I'm trying to do in this video back there, I think it's quite accurate.
Okay, so, cool. Let's keep scrolling through. We'll see where we get to.
So it's a valid trend, and we have these sort of areas of support and resistance right here. So this is a area of resistance being touched once, twice, 3 times, 4 times, several times, meaning that it is a valid, strong level.
Just jump in here if you see anything you think is like, hang on a sec, I probably wouldn't do that. Just jump in and say.
Yeah.
Now on the underside, we have this kind of key level because it was acting on the 1 hour. It was acting as a kind of support right here. Support, wicked, support, broke through, retested several of times, making it a valid resistance, and then broke through again. So this, I wouldn't call this neither a support or resistance area. I would just call it a key level, right? So now I'm going to go through why I took a trade right here. So as you can all see, we broke this major downtrend to the upside, made a retest back to not only this key level, but my what I call golden zone, and I'm sure many of you are familiar with it. The 50
is the golden zone something you're still using?
Yeah, I don't call it the golden zone anymore, but I definitely use the 61.8 fib.
Right,
And
right.
Yeah.
What do you call it now? You just call it 61.8, do you?
61.8, you know, not everything is a fancy name.
50 to 61.8% fib level. This is what I call my golden zone. I usually want to have my entries at the 61, but you know, depending on if price is showing rejection on the 50, I will also enter. So you draw your fib from the lowest low, including the wick, to the highest high, or the most recent high. So I was definitely looking for buys at this area. I did take a buy just right here. So on the 4 hour, we can identify we broke the bearish trend to the upside and made a retest back to our golden zone and this key level. Now it's fair to say that we have done we're finished on the 4 hour time frame.
It seems like, you know, it's a lot of confluence going on here, which is what you touched on in the show that the interview we've just done.
Yeah.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Yeah, there's a lot going on. I don't know if I would say that definitely that key level I'm referring to in this video, I would not consider that a valid area to rely on in these days.
Right.
Some key differences, I would say I don't ever look at the 4 hour anymore. And that's just preference, I guess. But I only really operate on the monthly, weekly, and daily. And the rest looks okay, you know. It's actually quite surprising. Like I said, I haven't watched this video in ages, so I'm actually quite impressed with myself.
Yeah, well, that's why 15-year-old forex trader reads chart like a pro. I mean, it is kind of pro level. I mean, ironically, that wasn't the original title that I had for it, and then I was just like, man, this guy is just absolutely nailed this, and I changed it last minute to this title, which was kind of more apt for it, because I think a lot of pro traders are going to be doing this kind of level of analysis and detail before they get into a trade. So it was very well done. So maybe we'll scroll forward and see. Was that our second trade? There we go. We're a little bit further forward.
Because of this right here. So we see that we are clearly respecting this key level right here, and we had the very high impact news on oil. You know, oil dropped to negative a couple of days ago. So of course, oil, the Canadian dollar is correlating with oil.
So you're even using the fundamentals, because that's still a big part of what you're doing, isn't it?
Yeah, and I think it's. It's quite cool that even back then I was considering things like that, and I was able to see that there is a link between oil prices plummeting and the Canadian dollar. So, yeah, decent.
Wow. Wow, it's ridiculous, really, when you think about it. I mean, even I don't think I probably at the time would have been able to go, right, yeah, there's that correlation here that we need to factor in.
I was only bullish at this point on the technical and the fundamental side of things. So what do I do to find my entry just around here? I pull out my fib level, and I mark out where my 61.8% fib is, which would be right here. Let's draw that as golden.
So what that tells me is, like, there's a lot of other traders out there using 61.8 fibs. I've actually tried it myself, and I can't. I did have a strategy at one point that I was using based on that, and then I think in hindsight it probably actually worked really well. I think it's the first time I saw price consistently reacting to a level that was just randomly drawn from a high to a low, right? And it was like, and then I realized, I realized probably many months later that I was the one screwing the strategy up. It was a valid strategy, but I was screwing it up. I just couldn't. I couldn't. I was either too greedy or too conservative. I couldn't find that middle ground. I just didn't have it in me.
Yeah. So the Fibonacci retracement is still a very big part of my way of analyzing the markets. But I find, just to comment a little bit on the differences from now and then, is that I don't find that technical confluences like trend lines and Fibonacci levels are actually reliable on the lower time frames of anything lower than the daily. So I see that I narrowed it down to, I think that's the 1 hour and the 4 hour, and I was looking for entry points using the Fibonacci, and I would say that they are unreliable at those time frames. But definitely, going in the right direction. And maybe if you want, I can pull up some examples of Fibonacci setups I've had lately.
Yeah, let's do that. All right, folks, we'll dive out of this video. We'll get Philip to share his screen and then have a look at that. So let's dive in.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
So I wanted to show how I use the Fibonacci retracements a little bit differently now than how I did back in the day. And the first thing is that I do not go below the daily time frame. I find that the Fibonacci, or any Confluence for that matter, is a lot more reliable and obedient on the higher time frames, if you can describe it that way. So to go through a couple of setups in the past where I based my trades off of Fibonacci retracements is the first one right here. And my thinking process at the time was that we have had constant bearish momentum for days or weeks here. And just psychologically, I want to identify the most likely area where sentiment should shift, meaning that I believe sellers will start to liquidate their positions and buyers will start to step in. And for me, especially having this strong bearish momentum, that was the weekly 38.2. And for that reason, I entered a buy position, which had a 1.39 risk reward ratio. And I think this was some time ago. So if I remember correctly, that was basically the only thing I based my theory on, was the 38.2 and a little bit of psychology, I guess. Second one is this, where we can identify one confluence, the other one being the break and retest of this previous ascending trend line, and then this area of resistance. So having all these three combined makes a quite, 38.2, not the 61.8. Since this did not happen at the time. So having all these three confluences make for a quite high probable of success trade. And therefore I would choose to risk more in a case like this, when the more confluences align within one area, the higher probability it has of succeeding. So that's number one, or number two. And then just a couple of weeks later, we had another one, which is actually, I would, looking back at it, say this is quite a questionable trade to take. But this was yet another 38.2.
And so there you obviously waited for it to respect that level. Then you decided to get in on some kind of retest.
Yeah, so my logic at the time was I could see this forming as a trend line. So this being the first touch, this being the second touch, sort of rejecting and then breaking through, and then having the 38.2. And you can see that I had quite a conservative stop loss placement. So it's quite low. It was below the 100 EMA. And it ended out playing out well. But is this a high probability of success trade? I'm not so sure. This would be somewhere in the middle.
And you talked about you had a 200 EMA trade there that you mentioned earlier.
Yeah. This one.
No, it was a bit longer, a bit further across. The one the one that was low probability.
Oh, right. This one right here.
Yeah.
So, like I keep on mentioning, my way of making calculated guesses based on pattern recognition. You have to be able to sort of have a feel for it. And I categorize my trades into certain tiers. So what I would say is an A-tier trade is a trade which I think is very probable to go in my favor, and a low one is not so probable. And then I adjust my risk that I risk on the trade depending on that. So this would be an extremely low one because I really only have one confluence that I'm depending on, and that's the daily 200 EMA. And it ended up working, but I would say even 6 times out of 10, 7 times out of 10, this setup would maybe would continue in the other direction. So.
And so when you risk low probability, I mean, what's the difference between that and a high probability trade?
So for a trade like this, I would say I definitely extended the target here. But let's say my initial target was somewhere around here. I was targeting these lows. That would make perfect sense, right? I'll target these lows, and my stop loss would most likely be somewhere around here, 1.66. I feel like this trade setup would make perfect sense, and the odds are in my favor. I have more than enough confluence to make this a high probability trade. So on such a setup where I have 1, 2, 3 confluences, I would risk 1.5%. Right? So 1.5.
And what would be the difference with the 200 EMA one Confluence setup?
So I would say maybe 0.35%.
Okay.
Yeah.
Interesting. Hey, look, Philip, it's been fantastic having you on. And look, it's been great to have a breakdown of the before and after. It seems like there's a lot of similarities, but there's some differences. And seeing how you've evolved over 5 years. Folks, if you do want to see that full video of when he was 15 years old, then that's on the channel. We'll link it up in the show notes. But yeah, for now, what's the best way for folks to find out more about you?
On my Instagram, which is Philip, 2_ BLOOM, and my website, kingforex.com.
Brilliant. Well, look, it's been great having you on again. Maybe we'll do it in 5 years' time. Who knows? Folks, if you do want to get those links, check out the link below the video to his show notes page. You'll get the interview that we've just done as well. Hit subscribe, like, and that notifications bell while you're down there, and we'll see you in the next one.